Well, thank you, everyone. Thank you for joining us. So this is the lending panel. We'll be discussing digital asset yields, specifically from the lending of USD and digital assets. I'm actually, I should start with an introduction of myself. So I'm Henry Elder. I run the wealth management business at Wave Financial, where we provide bespoke asset management services to high net worth investors looking for digital asset exposure and corporate treasuries that are looking for the same. We have the capability of offering them simple asset exposure, exposure through derivatives, and then also various ways and strategies for generating yield on those digital assets and fiat currencies. I am incredibly excited about this panel. This is probably one of the most luminary group of individuals that I've had the honor of moderating. Each one of you have accomplished and contributed an extraordinary amount to the digital asset space, and the companies that you represent have been absolutely instrumental in the maturation of these capital markets. So I'm very excited to hear from you. We have roughly 30 minutes to go through these questions. So I'd like to start with short intros from each one of you, emphasis on the short so that we can get into the questions. But if we could start with you, Dan, that'd be fantastic.
Sure. Been around in the space for 8 years, worked at 5 different crypto companies, including 2 exits. One exit was to blockchain.com. I was director of product over there, and at Kraken, which was, I sold my second company to Kraken. At Kraken, I'm building out the growth team underneath Jeremy Welch on product. So yeah, been around a little while and long-term hodler. So earning yield on my coins is an incredibly exciting opportunity, and I'm actually a customer of some folks in this panel.
Nick, why don't you go next?
Great, Nick Carmi, been in the space, been at BitGo for a little over a year and a half. Background is banking, worked with various banks in various capacities in prime brokerage, fixed income, FX, and derivatives. And between my banking career and BitGo, I worked at a very large, high-frequency proprietary trading shop.
Wonderful. Martin, tell us about yourself.
Awesome. My name is Martin Garcia. I'm the co-head of the desk at Genesis. Like these gentlemen, I've been in the space for quite some time. We started digital currency space back in 2013 when we were still second market. So Genesis is a wholly owned subsidiary of Digital Currency Group and operates trading and lending desks in the space.
Wonderful. Thank you, guys. And I do appreciate the brevity. Let's jump into the questions. Dan, I'd like to start with you. Kraken has obviously been an incredibly popular trading platform since 2011. It's my personal favorite. I love using you guys and the tools that you guys have built. But you made huge waves earlier this year when you were the first trading platform to get a banking license. So I'd like to hear more about what you guys plan to do with that license. You're obviously familiar with the kind of yields that can be generated on digital assets. And I'm especially curious to hear whether using that banking license to connect retail investors with digital assets, digital asset yields is on the roadmap.
Yeah, that's a great question. With Kraken Bank, which was part of our Wyoming SBDI license that enables us to create this Kraken Bank, and that's what we're calling it, we can now offer a variety of different types of financial products. And so for us, I think we're super excited about the opportunity to do things like lending and borrowing with this new banking license. So I can't give exact details as to when we're going to go down that route, but we did get this license to do things like that. We also might see something like on the lending and borrowing side that we could see other sectors of the Kraken empire start to work on that. For example, our OTC desk, which already facilitates spot trading, that might be something that they get into before our banking, our Kraken Bank, productizes a lending service.
Got it. And, we obviously have some very influential companies here, and all of you guys seem to be expanding your service offerings. So Nick, I'd also like to understand, BitGo, you guys have been a crypto custodian since 2011. You're one of the first crypto companies I think I was ever even introduced to, but you have turned into this sort of conglomerate, hoovering up all of these really interesting different companies in different pieces of the crypto industry. So I'm interested to hear, as you guys are building out BitGo Prime, what is your goal there? How are you going to apply this sort of vision to pushing forward the capital markets and digital assets?
It's great. It's a great question. Look, Mike Belch had this vision from probably the end of 2017 into 2018, right? How do we expand BitGo's footprint into the digital asset space, capitalizing on what he built with the team from a hot wallet, cold wallet, and custody services. The natural evolution is exactly the same thing the big banks did. You get into more diversified services, and the most important thing is prime brokerage, right? Which is a very lacking thing in the crypto space. Prime brokerage adds, creates better balance in the ecosystem, creates more fungibility with the way the contracts and the dealings are happening between clients, buyers, and sellers, the buy side and the sell side, if you wish, right? So we got into the prime broker space. We launched crypto borrowing and lending late last year, the beginning of this year. Then we acquired Lumina and Harbor. Lumina came in, the team from Lumina came in with a lot of great tools that supplemented our services on top of our wallets, from portfolio reporting, tax and accounting, and everything else, as well as the ability to be able to allow our clients to now trade directly out of their wallets, which we launched sometime during May, June of this year. We're going to continue building on this on the services that we can provide within prime brokerage. There are a lot of, if you look at the big banks, prime broker is a very, very big component of the business, a very, very big component of their P&L as well. And we're hopeful that this is going to be part and parcel of this product and this service.
Yeah, thank you. That is an incredibly important piece of this. As you mentioned, obviously prime brokerage is sort of the plumbing through which a lot of traditional capital markets function. And so bringing that functionality to the digital asset markets, I think, is incredibly important.
Even in the financial markets, prime brokerage is a lot of things to a lot of people, right? And it's going to be the same way in the crypto space. It's a product that's very much needed to keep the crypto markets growing and expanding into the institutional space a lot faster than they currently are. And I'm very, just look around you, look at the people here in this that you have here. We're all very dedicated to getting this done right.
Right, absolutely. Well, Martin, speaking of traditional capital market services, I mean, you guys were, I think, one of the first ones to offer, real regulated, OTC desk, lending, all of that stuff into the crypto capital markets. And, we are obviously counterparties with you in a ton of deals. We love working with you guys, and you've grown a lot over the years. I think your guys' balance sheet, well, I'll let you tell us where your balance sheet's at, but I know that it starts with a B. So, I'd love to hear more about, how you guys have seen the crypto capital markets evolve over time and what you're sort of seeing in the future.
Yeah. So, I think it's important to note that, when you look at the companies that you have here, and Nick at BitGo and Dan at Kraken, we all have a fantastic relationship. And while we compete in many of the things that we do, we definitely, what's really refreshing in this space is the rising tide really lifts all boats, and we work with everybody in the space, including our competitors. So at Genesis, it's been great seeing the growth. we've been very, very fortunate that we, had a foothold in the space and really one of the most respected trading desks in the early days, and really, we're the first to launch digital currency lending, in early 2018. Since that time, the book started really just as a need for our clients. We see the world, much the same way that Nick described, in that if we're going to see the institutional adoption in this space, they're going to need a prime broker that can help them with their trading, with leverage, with derivatives, with custody, with all of these things, and really be a one-stop shop to allow them to efficiently, trade and execute their sophisticated strategies. So from that, we saw the need for borrowing. It was right place, right time. Obviously, you guys know what happened in 2017 with the run-up. We launched the desk kind of right at the peak, and just in time for a lot of our sophisticated hedge funds to be able to gain access.
Martin, I think we lost your audio there. I don't know what just happened. Oh,
Yeah,
there you're back.
no worries. So we saw the desk. Sorry about that.
No worries, you're back.
Getting phone calls at the same time. It's joys of a busy market. So we saw the space grow from, at the end of 2018, we hadn't even breached, $1 billion in book value. So it took us about, a little over a year there. And then from 1 billion to 2 billion was, really, a matter of three to 4 months. So really ballooned. The current book value is north of 2.5 billion. So we've seen tremendous growth in the book, in the way that the book is composed, and really across all of our activities. Genesis comes at this from when we started, more of the regulated fashion, right? So we did our trading in our broker dealer, which is FINRA and SEC regulated, has the New York Department of Financial Service BIT license. The lending business, there's no regulator for lending, but it's done within a FinCEN, MSB. And it's just been tremendous to see the growth of ourselves and of others. I mean, it's been fantastic to see what Nick's been doing on his end. And so we've really enjoyed watching the space, grow and progress and change over, a few short years. A lot has changed in the space, and we expect that trend to continue.
Yeah. Well, that's some great insights. I want to kind of get into some of the meat of the lending industry now for digital assets. Bitcoin, I think a lot of our investors, a lot of our clients have a good understanding of the value that underpins Bitcoin, and therefore can extrapolate from there into the value that underpins other digital assets. And I actually want to personally thank you, Dan, because you have been instrumental in my journey of understanding the value behind Bitcoin. So the next logical step from there oftentimes is for people to realize that there are also incredible yield opportunities that have been built on the back of the incredible decentralized capital markets that Bitcoin has allowed for. So I want them to understand, if we all know that yields are basically a price of risk, and the yields that you find in the capital market space are typically 10 times higher than, or more, higher than what you'll find in the traditional space. So what are some of the risks that you guys are seeing that justify those yields? What are behind that, so that our clients and investors and people who are watching can better understand those risks for themselves? And this is open to all three of you. So.
Yeah, so I think that when you look at the yields in this space, by and large, they're going to follow the futures curves, and it's going to follow, where the basis trades, right? So, in a bullish market, people are going to be able to buy spot and sell future, thus capturing that spread, and that's where the yields are primarily coming from. I mean, this space is really starved for capital in a decent way. And I think that's the service that we provide at Genesis, is really access to that capital so that people can execute these strategies, take advantage of these different arbitrages, and we're able to vet these counterparties and provide that leverage for them to go out and execute these strategies.
And so you're talking about, when you're talking about the curves, are you are you basically talking about the cash and carry trade here?
That's exactly right. That's exactly right. So the risks to a counterparty, you've hit the nail on the head, and that's why we feel at Genesis we're very well situated, just given the fact that we are a wholly owned subsidiary of Digital Currency Group, the fact that we have the largest book in the space, and that we have a substantial amount of equity in the business. It should give people a lot of comfort, in addition to the risk processes that we have. And I can tell you that everybody in this space, that I see, is very diligent, at least from the larger, more regulated or more tried and true, players.
Yeah,
they're really taking risk very, very seriously. We were very fortunate to have been in the space a long time and have seen some really major drawdowns in market events. March of this year, in the middle of a global pandemic, 30% plus move in the Bitcoin price, it really stresses things. And, we're very happy to report that we were able to pass that test and really learn a lot in the process. I mean, you learn a lot about liquidity and how much you need to have, making sure that you're not running, very, very tightly. You want to be able to service people quickly. When the market is spooked, what matters is how quickly can you get those assets to your clients? How quickly can your clients meet their margin calls to you? And how can you make sure that everything is messaged very quickly in a 24/7 way?
yeah.
So we think it matters a lot.
Yeah.
I agree with Martin a lot. So I mean, it's the counterparty risk, the market risk, are also a big function of the pricing that goes into the yield that you're offering your clients, right? And the types of clients that you partner with. This is a partnership, right? It's a business partnership, but it's very important to be able to understand your client very well, understand what they're doing, their strategy, their risk, the risk management style, their business management style. I mean, we some of us have worked in the industry, and I'm sure you've heard of very, very smart traders, but they're unable to manage the business. And if you've been around a little bit as long as I have been around, you've seen a lot of hedge funds go out of business, not because they didn't know how to manage their risk, because they didn't know how to manage their business. So you have to factor all of these components in. Again, March was a big event this year for us, for the industry. I mean, if you go back in 2020, what was a big event? I would say March was pretty cool event. It was a big event. It was the first time I've experienced an event like this in the crypto space from the seat I was in. But again, we were able to handle it very well. Why is that? Yes, we do have proper risk controls. Yes, we do have proper processes and management in place. But it's also the type of clients that you are partnering with and you're doing business with. Clients. That was the time when our clients wanted to borrow more, wanted to do more, and we had to be there for them, and we were there for them, and they were able to add more collateral, meet margin calls, and do everything. So the system needs to be stressed more. Hopefully in a positive way, of course. We don't want it to stress more and be superly negative on everybody. But when the system gets stressed, then you start identifying who are the proper counterparties that you want to continue the business with, and who are the counterparties that know what they're doing and managing the risk properly.
Yeah. Well, I suppose if Bitcoin is anti-fragile, then the harder the stress, the more it benefits, right? So I say bring it on. But Dan, you wrote the guide on Bitcoin yield, so I'd love to hear your perspectives on this as well.
Yeah, it's I mean, the folks at like Genesis have been around for forever. They're the first, to the best of my knowledge, the first like legitimate operation, the first pedigreed operation to really build out a strong lending arm. I wrote a playbook because I've had my own personal journey going through evaluating different services, starting with ones like BlockFi, Ledin, eventually making my way to Genesis and evaluating new things like Lightning Pool and others. The way to think about it is that uh, you know, everything in crypto doesn't necessarily mimic the mainstream financial market. It sort of rhymes. You could think of holding Bitcoin as like your risk-free return. It's not a perfect analogy, but holding Bitcoin, you don't have to trust a third. You don't have to trust a third party. Then you have services like Lightning Pool or CoinJoins, which are more protocol related. So now you're interfacing with the protocol, and those earn you very, very low yields, but also have very low risk. And then if you go out further in terms of that risk stack or that interest rate stack, and you look at more activities that you can do, like lending to Genesis or lending to BitGo, then you get really into the weeds of like, okay, how can I assess my counterparty risk? And that's a little tricky to do because we don't necessarily understand the mixture of customers or counterparties on the other side of that. Because I'm facing Genesis and Genesis is facing their counterparties. However, Genesis and these other desks and BitGo and others have demonstrated some enormous resiliency. March 12th, Bitcoin drops to 3,800. Almost everyone was okay. I didn't hear of a desk blowing up. So I think that is testament to the resiliency of the risk and risk management systems that these companies have created. So I think it's a very new industry. There's a lot of unknown counterparty risk. But I think, what Martin said earlier around how a lot of this is driven by the cash and carry trade. I think some of these counterparties that these desks are lending to, I think, what they're trading on aren't, some folks would worry, oh, they're borrowing Bitcoin and they're doing whatever they like with it, but they're posting collateral. So most of these people are borrowing coin and posting, between 30 and 70% collateralization, and maybe even higher than that. And I'm speaking broadly. I'm not speaking about Genesis operations. And then, when you look at the other source of borrow, a lot of people are borrowing either to go short or to take advantage of the GBTC arbitrage, which that seems to be a pretty safe trade. So a lot of folks, I think, justifiably look at lending and they're a little afraid because the existing financial system has had so many issues with rehypothecation and other things. But I think when we look at the source of the borrow and why folks are borrowing and why that yield is the yield that it is, it's a decent, I think, a pretty decent risk reward structure.
Good. That's great. That's very good to hear. And, we were also very heartened to hear how all of the desks came through that March 12th drawdown effectively unscathed. I mean, I'm sure there was pain, but we're all still here, right? And I think that was the second or third worst single day drawdown in Bitcoin's history. And look where we are today, Now, one thing that did appear out of that was the explosion of the DeFi space. And so I'd be interested to hear, how do you guys see the risks in that space compared to, the much more known quantifiable risks that you deal with on a daily basis with your lending desks or more centralized exchange?
Yeah, well, Dan's going to be the expert here as far as I'm concerned for the three of us. On our side, we love what's going on there. We think it's super interesting. I think that everything's going to go more and more that direction. We tend to be more, we're a centralized desk. We are more comfortable facing a counterparty who understands the space, who does their research, who also has balance sheet that we can diligence, and extending them credit to then go take advantage of those external markets. I think that we view ourselves as really stewards of the space, and we want to facilitate all of this activity. We understand the responsibility that we have in, we want to make people aware when the large public companies, like MicroStrategy just joined, when they join the space, we want them to know that there's a place where they can take the Bitcoin that they've acquired and they can get cash against it, right? They can, lever those positions up. They can use the capital markets that they've been used to, and we find that's really important. Now, on the DeFi space in particular, there's some really exciting stuff, but it's also really, really early, and it's dangerous for someone like me that I know what I don't know, and some of these things are new. And while there's fantastic opportunities, you really need to know what you're doing. And we put ourselves in a position where we work with trusted counterparties and let them, the experts, play in that space and provide really the much needed capital to continue to let those operations proliferate, which we're very supportive of.
I'd like to plus one Martin's comment on knowing what we don't know. With DeFi products or DeFi protocols, the threat of a 0 days financial activities that has occurred in humankind history. So that process is, while a person like myself who may be a customer, or me facing Genesis or BlockFi or Ledin, I might not understand their counterparty risk, but I do know the type of risk that they're taking, which is, I think, reassuring.
I'm glad to hear you, Dan, say that. I was expecting you to be the contrarian in this conversation, but I mean, BitGo is very supportive for the DeFi platforms. We have no issues with them. Having worked at banks for many years on the repo desk and the stock lending desk, it's as old-fashioned as can get, right? And we do need the automation, we're in the crypto space now, and it is still run the old-fashioned way, Telegram, chat channels, phone calls, and everything else. So I think if there is a way we can find to continue adding automation, whether it's through the DeFi product or something similar to DeFi product, where it gives us, the lenders, and the clients, the borrower, the comfort level that everything is working very efficiently, is very much needed. I mean, I think the issue we're going to have, and this is an old age issue. Like, it's not like the banks can't automate the repo desks. It's not like they can't automate the stock loan business. It has to be a market-wide event, right? Because the clients are still going to be able to say, hey, you know what? I'm talking to, Genesis is fully automated. BitGo is not automated. I get the automated rates from Genesis, and now also I can call BitGo and try to get the best deal ever. If we're able to find a way to automate the process for everybody, where it's almost risk-free from a counterparty perspective, or very much risk control, it'd be great. This is the right space. This is the right product to be able to create that type of automation. It's a new market. It's every day people come up with new ideas and new things, and I think it's ripe for the industry to do more on finding ways to automate the borrowing and lending of assets.
I absolutely agree, and that actually is a great lead into the final question that I want to leave you guys with, which is, we're here with effectively the world's newest asset class, and we're talking about, as Dan said, the oldest financial service. So where do we go from here? What are the biggest risks on the horizon, and how do we continue to grow? How do we solve those problems? And how do we create that universal automation and bring these capital markets to the masses?
That's a very loaded question. I mean, we all have to come together. That's first and foremost. We all have to come together, and we can't continue working in a siloed environment, right? The products are they're not fungible, right? The clearing of crypto is very cumbersome. The movement of coins is very hard. I'm going to throw, do we need a central clearing counterparty? Right? That could help alleviate a lot of the issues we see in the market. The advent of prime brokerage, that is super important, right? And again, this is not a one firm that's going to solve the problem. It's not one bank that solved the banking industry, right? And it's not one bank that took it down either. So we need everybody to come together. and collaborate and work. Yes, do I do business with Genesis? Yes, I do, and I've done business with them in the past. Are they a competitor? Of course, but it doesn't mean that we can't work together. It does not mean that we can't collaborate to do the right thing, because there are going to be a lot of counterparties out there that maybe they should not be in the space, and there are going to be the good actors and the bad actors, and we need to get to a space, to a place where we're all working together and make the market more efficient.
Yeah, I think Nick hit on it a little earlier too. I think automation is going to be a big part of what makes this easier, right? I think that even for somebody, like Dan, who's been in the space forever, I mean, think about the diligence that he had to do just to lend his assets out. Think about all the things he had to think of, and he's somebody who knows how hardware devices work and ledgers, and he could hold his own assets. Now you have people that have tons of assets, and they really don't have the know-how to be able to execute some of these strategies. And I think that it's our responsibility as the firms in this industry, going after prime brokerage, going after these large institutions that are coming in, to really make this not only a safe space to transact, but also sophisticated enough so that as these large people come in, they can execute in a way that they understand. So it's still in 2020, it's still for my dad to go buy Bitcoin, it's still a little bit of a challenge. An institution, yeah, there's some more ways, but there's still a lot of diligence that you have to do. There's still, Genesis, we feel like we're quite large, but we still have that chip on our shoulder, like we're very small and we're less known. So we want to continue to market ourselves, to let these large institutions that are coming in know that there are people out there that you can execute these strategies with, that are doing a lot of these exciting things. So I think where we go from here, it is going to be a testament to these firms, that we're working with, continuing to grow. I think that people are going to demand the same products and services that they enjoy in every other asset class. I think it's going to be a little bit different here, in that I think that once we get to a critical mass, even larger than we are now, I think digital assets are going to start leading the way for other asset classes, right? I think some of the things that you see with smart contracts and some of these DeFi protocols, like that is going to be started to be implemented in more traditional places. I think that the adoption is going to come in waves. I think that we're in another, really, really strong bull market that I expect to continue for a little bit. But I think that we can't be disheartened when there is an inevitable pullback, and we have to keep building and to keep providing these products and services, and to keep making people feel that professional feel that, yes, there are the anarchists and the crazies that are out there. It's a scary space, in that there are bad actors around every corner. But we want people to know that there are good folks that are doing things institutionally in a way that they can understand, and to help you understand the risks and to accomplish the goals that you're looking for.
Yeah. Thank you. Dan, you want to play us out here? We got 1 minute.
Sounds good. Let's see if I can fit it all in. So definitely agree with Nick and Martin on more automation. A lot of these processes are very manual, a lot of heavy lifting. I think education as well plays a huge part, and Martin touched on this, which is that bringing folks in, institutional folks into the crypto space is there's a large educational component to that. And as well, you've got folks in crypto who don't trust, old school banking services like lending and borrowing. So I think that there's education on both sides. And I'll leave with something a little bit more controversial. And Nick, I'm going to pick on you here a little bit. On the settlement side, that's why we have Bitcoin. Clearing and settlement happens on the Bitcoin ledger. I don't have to trust any counterparty when I transact on the Bitcoin ledger. It clears there. After X amount of confirmations, I'm very confident that it will clear. So I think that's what Bitcoin provides us. And I would be a little sad if we resorted to centralized systems for clearing versus using the Bitcoin ledger as that clearing mechanism. But
Yeah, no, that's a good point. Look, I'm not. I like the trustworthiness of the blockchain, no doubt about it, right? And I think we can come up with a lot of examples where there was fraud in the financial markets during the settlements, and it still probably exists. The the speed of the way things happen, the way the movements of coin happen between your platform and my platform and other people. That's what I mean by central clearing counterparty. I'm not talking about saying something like the DTCC or the FedWire or Euroclear or anything like that. I mean, I love the way that the blockchain works. I love the integrity of it. I love the security of it. I just want to see it a lot faster than it is and more nimble.
Well, Bitcoin is the ultimate free market, so we'll see which philosophy wins out. But thank you, gentlemen. I really appreciated your insights on this panel. It was absolutely an honor to chat with all of you. Thank you very much. And to everyone who's watching, please stay tuned. We actually have Michael Saylor next, giving us a keynote, a man who needs no introduction, but we'll get one nonetheless. We are very excited to be speaking with him, and he will be interviewed by David Seymour, the CEO of Wave Financial. Thank you so much.